Hello and welcome. My name is Benoit Poliquin, and I'm the founder and one of the portfolio managers here at Exponent Investment Management. And you are watching the third quarter 2021 review. As always, there are two videos, a shorter one where we just go through the performance of certain asset classes, and another longer video where we go through graphs and charts of what we've transpired or what has transpired in the past quarter and some of the information that we are studying to make some of our decision for the coming quarters. As always, thank you for watching. So let's get started. The first chart I'm going to show you is the performance of our usual performance summary table, where we're showing you the indices from Canada, the US in Canadian dollar terms, as well as the NASDAQ, Europe, and global indices, as well as the Canadian bond index. The point here for this quarter, everything is red, everything is negative. The TSX, Canadian market, did slightly better than the rest of the markets, and the bonds did okay as well, slightly negative as well. But they are still negative for the year. Overall, though, on a rolling 12 months basis, all of the equity markets have done quite well. The Canadian dollar versus the US dollar, a bit of a change, but not much. The Canadian dollar is up about 3 cents. Oil prices are stable. The rise in the oil price really happened in October. Volatility is up a little bit. That's normal. When you see negative markets, you always see a spike in volatility. And the yields in Canada are up slightly, which would explain this negative return. But in the US, there's not a real change in the 10-year bond yields. And the yield curve, which is kind of a thermometer gauge for how well the economy is expected to be or how it's expected to behave on the part of the bond market, not a whole lot change here. So both in Canada and the US, not a big change in the yield curve. So that's all in all what happened. Negative markets. You probably noticed that some of the buying that happened this quarter, we tend to like to do our buying when the tape is red. This performance attribution chart is, we like to show this one. What we're trying to convey are three things. One, we want to see what the top 10 are doing. Are they names that we've recognized? It's consistently the same names. So in this case, this quarter, it's a bit of a change. We're not seeing the usual suspects in the US, the large tech names. We're more seeing energy, commodities, and biotech, something like Moderna. I mean, we are, after all, in a pandemic. So energy, some retail, and commodities did well in the US. And the other thing that we're looking at is the difference between the top 5 stocks in the S&P 500, the 5 largest ones, which have an important weight, and the other 495 stocks. What we're really looking for is there a disparity in performance? What that will tell us is if the performance is broad-based or if it's very focused. So here we have a very tight difference in performance. That tells us that the behavior of the market is very broad. It's the same story in Canada, where we're comparing the TSX composite index to its cousin of equal weight, meaning each stock has the same weight in the index. Again, we're looking for a disparity in performance, which we're not seeing, which we did not see in the second quarter. In terms of the top 10 in Canada, again, we would expect to see sort of the banks, the financials, maybe some pipelines, and maybe Shopify. This past quarter, we don't see any of these. We're seeing something that is like a leisure stock and BRP, commodities, and biotech as well. What are the things that we're focusing on for 2022 and beyond? What remains immutable? Dividend focus. We want to see companies that are rewarding shareholders, ideally by dividends, quality balance sheets, not too much debt. In these low interest rates, obviously a lot of companies are taking on debt because it's so cheap. Proven management, meaning the business model is proven, but it's still being also worked on and improved over time. Global reach. It's a lot easier to run a business if you've got a global marketplace. Valuation. We don't want to overpay for assets, and we want to stay from running portfolios based on headlines or political risk. The adjustments, well, rising interest rates, it's always an issue. Are they an inflation? Is inflation transitory, or will it stay for us for a period of time? Consumer discretionary, it's something that we're looking at. Income, are they going up? And housing and inflation are going up as well. So that really leaves the consumer with a lot less money in their pockets to spend. Migration, we talked about that in previous quarters. Are people moving away from the cities, or are they going to move back post-pandemic? Housing prices, we saw secondary Canadian cities, and in the US it's the same story, where secondary cities really saw a significant increase in prices. Will that continue? The K recovery is something that we've talked about a lot in past videos. The difference in the upper strata socioeconomically and how well they've done during and after the pandemic as opposed to other socioeconomic stratas and demographics. We are on the cusp of having the millennials turn 40 this year, and typically when demographically anyway, 40-year-olds tend to be very active economically. And then government policies. We just had a U.S. or a Canadian election, I should say, and we are looking towards midterm elections in the U.S., and that usually has an impact on government policies. As always, thank you so much for watching. If you have any questions or comments about maybe there's some topics you want us to cover in future videos, by all means, we'd love to hear from you. Please drop us an email at the email address, I should say, on the screen. I'm Benoit Poliquin for Exponent Investment Management.